I should say welcome again, because it's been not long ago that we've met last time, and I hope we have not reached an annoying level of frequency of meeting with yourselves. It's just a worrying level, perhaps, of how frequent we come to your screens. Before we start, I obviously present our guests or speakers today, Mr. João Brás, Chairman of the Management Board, CEO, and Mr. Fernando Bicho, Deputy Chairman of the Board and CFO. Before I let the gentlemen speak, I need to do a bit of a housekeeping duty. I would like to remind you that the data that we present today is preliminary and unaudited, so you need to wait until 21st of February for the publication of full and audited data. Thank you very much, gentlemen. The floor is yours.
Thank you. Good afternoon. Thank you for attending this presentation. Yesterday, when we were preparing for this presentation, I just recalled that last time that we were able to have a physical meeting here with the presence of analysts and investors was already 2 years ago. So it is already 2 years, consecutive years, that we are making these presentations only through electronic channels. So it shows how quickly the time flies. So today we will present the fourth quarter and full year 2021 preliminary results. I will not go through every single detail of the presentation that was previously distributed to you, but I will try to focus on the main points and on the main messages regarding the performance of the bank during the year. I will start with page number 5, where, if you remember, 1 year ago, we said that 2021 would be a transition year before new strategy rollout, and at that time we presented a snapshot of the main objectives that we were trying to achieve in the year 2021. And now, after closing the year, we can say that on one side, we had a quick recovery of business results. In fact, we had a record year in terms of origination of mortgage loans, with almost 10 billion zlotys of new mortgage loans originated, and also with the sales of cash loans up 21% year on year, and the net profit without FX mortgage costs up 57% year on year. In terms of operational efficiency, we continued the fine-tuning of the branch network after the significant reduction that had followed the acquisition and merger with Eurobank in 2020, and we further reduced the number of branches by 8% in 2021, and we achieved a reported cost-to-income ratio of 46% against the planned target of 47%. And on the full digitalization path, we also achieved significant milestones. The share of digital clients is already above 80%, and we continue to extend our digital customer base beyond the customer age segments, and we launched in 2021 the mobile app Junior. That was also a significant success. Page number 6 reminds the pillars of the Millennium 24 strategy that we have announced almost 2 months ago, inspired by people, as you recall, and that will be underlying our presentations during the next periods. And also on page 7, we just remind what are our strategic ambitions for 2024, which I will not repeat now, but also which show the path that we expect to follow and to achieve during the next 3 years, and in which the year of 2021 was very important in setting some trends that create a very good base for further growth and development. Pages 8 and 9 summarize the key P&L items and key balance sheet and business items. We will go in more detail throughout the presentation, but just here I would highlight first the significant improvement of net interest income in the fourth quarter rose almost 15% versus the previous quarter, but also in the full year already with a growth of 5% versus 2020. The double-digit growth of fee and commission income also in 2021. The reduction of costs by 6% year-on-year, and also the much lower cost of credit risk, which was less than half of the levels that were shown in 2020. On the other side, we had a significant increase of the provisions for legal risk, which generated, at the end of the day, a net loss during the financial year of 2021. But still, if we would exclude those extraordinary costs connected with FX mortgage legal risk issues, we would have shown for the first time a net profit above 1 billion zlotys. And on page 9, also we can see as main numbers the solid growth of loans by almost 7% year-on-year, while at the same time we were significantly decreasing the net value of the FX mortgage loan portfolio, and also the excellent achievement in terms of the asset quality by reducing the NPL ratio to 4.4% from 5% 1 year before, while increasing at the same time the coverage of NPLs by provisions. Moving now to page 10. So we had in the full year 2021 a net loss of 1.3 billion zlotys, excluding the FX mortgage related costs. We booked a net profit of 1.1 billion zlotys, which is 45% above the year 2020, also excluding other extraordinary one-offs. It is visible on the right-hand side of this page the sustained growth of the net profit without extraordinary items, which in the fourth quarter was already above 300 million zlotys. And also, despite some items that negatively affected operating income during the year, that still, when we compare the fourth quarter 2021, was also above the fourth quarter of 2020. So in a snapshot on page 11, we have on one side the adjusted net profit, so excluding extraordinary items, growing 45% year-on-year in 2021, a strong rebound of net interest margin, fees up by 11% year-on-year, an adjusted ROE excluding these FX mortgage-related costs and extraordinary items at 13.6%, cost reduction by 6%, and the higher level of coverage of NPLs over 90 days. Going now in more detail through the P&L, on page 12, we were already in a positive trend regarding net interest income coming from the second and third quarters. We had already signalized that even without interest rate changes, we would achieve a higher NII in the full year 21 versus 2020. But of course, we also benefited from the cycle of increase of interest rates that started in the beginning of October, which helped to further increase the net interest income in the fourth quarter by 15% versus the previous quarter, and bringing the overall NII higher by 5% versus the previous year. The driver of this growth was the quicker repricing of loans when compared with deposits, and which is exactly what happened when interest rates went down. So when we had the cuts of the interest rates after the beginning of the pandemic, we also saw at that time a faster repricing of loans downwards than the adjustment in the cost of the deposits. So as a consequence of these two trends, our net interest margin increased from 2.61 to 2.98% in the fourth quarter. In terms of fees and commissions, we had the best quarter of the last 8, with a growth of 7% versus the previous quarter, and in terms of full year, a growth of 11% versus the previous year, and in which we had a strong contribution of commissions coming from loans and cards, and also from account service and other. Moving to the cost side. So we had a reduction of costs on a reported basis by 6% year on year. If we exclude the contributions to the Banking Guarantee Fund and the integration costs, the costs would have been flat versus the previous year, which still is a significant achievement, taking into consideration the cost pressure that, in general, companies and banks are facing in Poland since mid last year, which are translating into higher pressure in terms of staff costs, but also in terms of other admin costs. As a consequence of this positive performance, the cost-to-income ratio decreased, and on an adjusted basis, reached less than 43% when compared with 45.8% in 2020. Throughout the year, we had a continuation of a gradual adjustment in the number of employees, which fell by 357 on a yearly basis, and also we had the continuation of the fine-tuning optimization of the branch network, which was reduced or consolidated by another 47 branches during the year 2021. Moving now to the FX mortgage portfolio. So looking at the full year, we had a significant reduction of the portfolio in currency by 17%, and just in the fourth quarter by 6%. So this is the reduction excluding FX impact. As a consequence of this, and also the growth of the other portfolios, the FX mortgage portfolio continues to be diluted, and the portfolio overall represented 12.4% of total gross loans, or 11.4% just the part that was originated by Bank Millennium. We had still a continuation of the increase of new lawsuits, although at a lower number than in the previous 2 quarters. And on the other side, we continue to increase the amount of provisions for legal risk, which in the fourth quarter 2021 reached 662 million zlotys, just connected with the part originated by Bank Millennium, and this was the amount that influenced the P&L in the fourth quarter, bringing the cumulative balance of provisions against legal risk to close to 3 billion zlotys. On page 16, still continuing on this topic of provisions. So as a consequence of the increase of the provisions for the legal risk and the reduction of the portfolio, the total stock of provisions represents now 25.7% of the outstanding balance of FX mortgage loans originated by Bank Millennium. In the last 3 quarters, the number of new lawsuits was still relatively high, although in the fourth quarter, as I said, was lower than in the previous 2 quarters. But at the same time, we had a higher number of amicable settlements with clients. In the fourth quarter, we reached agreements with 2,614 customers, which implied a cost of the negotiations booked through P&L of 144 million zlotys. Page 17 is just a new split of the segmental reporting that also will be included in our annual report, in which we isolated the segment of FX mortgages in order just to show even in more detail where are the revenues and costs connected with this portfolio, and of course confirms the clear picture that the core business is really the source of the pre-provision profits, while the FX mortgage segment is generating a significant negative result as a consequence of the cost connected with provisions for legal risk and also the costs of the negotiations of settlements with the customers. And this not to speak, of course, about the additional capital that is currently allocated to the portfolio of FX mortgage. On page 18, liquidity continues to be solid. The loan-to-deposit ratio was stable at 86%. In terms of capital ratios, of course, they fell as a consequence of booking a loss in the fourth quarter, but at the same time, we managed to offset the impact of this loss partially through reduction of risk-weighted assets, and also at the same time, there was a decrease of the minimum capital ratios that the bank is obliged to fulfill as a consequence of the update and reduction of the Pillar 2 buffer that was communicated in the fourth quarter. We continue our preparation to the potential issuance of senior non-preferred bonds in the first half of 2022 in order to fulfill MREL requirements, and last Friday we confirmed by current report the approval, internal approval of setting up the EMTN program. Moving now to the second part of the presentation about business development. On page 20, a few highlights. So on one side, retail business growing fast, already above pre-COVID levels, and also corporate segment already showing signs of gradual improvement. We finished the year with overall loan growth of 7% year-on-year. Very strong sales of mortgage loans, as I mentioned, almost 10 billion zlotys. Cash loan sales above last year by 21%. Debit cards growing almost by 100,000. Active digital customers, 2.3 million. And customer deposits growing by 12%. On page 21, going in more detail through the numbers, the growth of the loan portfolio was driven by the significant growth of the PLN mortgage loan portfolio by 29% year-on-year, while the FX mortgage portfolio contracted. The consumer loan portfolio grew at a smaller pace, 4% year-on-year, and important is also the rebound in corporate loans driven by leasing and factoring, leading to a growth in the full year 21 of 4%. Structure of the loan portfolio continues to change with the dilution of the FX mortgage portfolio and an increase of the share of PLN mortgages. Looking at customer deposits, where we have not been aggressive in recent periods. In the quarter, the growth was just 1%. In the year, 12%, mainly driven by growth of deposits from companies. And in terms of investment products, the fourth quarter was affected by market correction, and so for the full year, overall growth of investment products was only 3%. On page 22, apart from what I already mentioned, the growth of the PLN mortgages driving the overall growth of retail loans, we should also mention that if we excluded the contraction of the FX mortgage loans, total retail loans would have grown 19% year-on-year. This was supported by record sales of mortgage loans, which peaked at 2.8 billion zlotys in the fourth quarter of 2021, a growth of 24% year-on-year, leading the full year sales 46% above 2020 and allowing us to reach a market share of 12.5%. On the cash loans, the fourth quarter was weaker than the previous one. Still, cumulated sales were higher by 21% year-on-year, and our market share stood above 10%. On page 23, the pace of customer acquisition is increasing. So in the year, we had a growth of 87,000 active retail customers, of which 30,000 just in the fourth quarter, while also the number of cards increased significantly, 95,000 increase of the number of debit cards just in 1 year. Page 24, some figures to illustrate the increased usage of banking services online by our clients. So we would highlight that 77% of cash loan sales in the fourth quarter 2021 were done digitally, and this represents a double of the number that we had 1 year before. And also 29% of current accounts were opening through digital channels in the fourth quarter 2021, and this represents an increase of 32% versus the fourth quarter of 2020. The growth in payments and e-commerce services is growing at a fast pace, as you can see on page 25. In fourth quarter 21, as much as 1.58 million customers performed at least one e-commerce payment, and 64% choose to pay by Blick. And apart from this, all the other indicators show a significant increase in the usage of value-added services, as it is shown on this page 25. On page 26, we keep the innovation pace. In this quarter, we would highlight the launch of innovative application, the app for Apple Watch. Also the continuation of the digitalization of the mortgage loan process, including now the possibility of attaching insurance policies, and also the developments that are being done in our investment funds, investment products platform that will be even more visible in the near future. On page 28, moving now to corporate business. We have a gradual growth of the loans which reached 3% year on year, which was clearly driven by a strong growth of factoring by 10% year on year in terms of portfolio, and also leasing, which portfolio grew by 7% year on year. We also see a robust pace of growth of current accounts by 18% year on year, and a strong pickup in transaction activity, and digitalization of clients' services progressing, of which we would highlight the implementation of 24-hour FX trading for our corporate customers that is now fully available, and also with conditional orders, and also the increase in the number of agreements signed digitally. On page 29, it is visible the recovery and rebound of leasing sales, which increased by 57% year on year. Leasing had been the most affected segment during the pandemic, but now in 2021 had a huge rebound. Factoring also growing very solidly, 17% increase in turnover versus the previous year. And last but not the least, also a significant increase in the volume of FX transactions by 26% year on year. So these are the most important points regarding our results of the fourth quarter and full year. Thank you very much.
Thank you very much, Fernando.